whether new highs are possible, and much sooner than many had expected. Let's ask Dan Greenhaus. He is Solus Alternative Asset Management's chief strategist with me here at Post 9. The rebound in this market has been incredible, as Bespoke points out just a short time ago. The last time the S&P erased a 15% year-to-date decline in under 6 weeks was 1982. It says a lot about what we've done here.
I think it says more about the drop than it does the rebound, because there is a symmetry here, as a lot of market practitioners know. Oftentimes, the speed or the rapidity with which you experience declines says something about how fast you come back. Thinking out loud, because I wasn't aware of that stat, something like the Thai baht crisis in '97 comes to mind. The devaluation in 2011 took a little longer. Not the devaluation, the downgrade. So I think there's something to be said for how fast we've come back. But at the same time, just to repeat, that sell-off was 20%, basically top to bottom, on worst case outcomes that were really unlikely to come to pass, and since then have proven unlikely to come to pass. And so in conjunction with a pretty strong first quarter earnings season, I don't know why you wouldn't have recouped most of, if not all of, that decline.
Yeah, but I mean, last Thursday or Friday, I don't know if you had many takers on 5,900 on the S&P by
fair.
Tuesday.
No, that's fair.
And the thing that makes it different from all the other things that you mentioned, those weren't self-inflicted. Those were existential, potentially, issues that came up that needed to be dealt with, currency crises, et cetera. This was an own goal.
Sure, but the fact that it's, to use your phrase, an own goal doesn't really matter. I think, obviously, investors were very concerned about the likelihood of 150% tariffs, let's say, on our largest trading partner, $440 billion of imported goods, and in some respects reacted accordingly given those headlines. My point was, you just could have thought about this a little more rationally and seen the headlines for what they were, which was publicly based negotiating strategy, agree or disagree with the course. And again, this is a semantic debate to some degree. I think the bigger issue in the short term here is, forget the rapidity of the decline. The importance is we are now above where we were on Liberation Day, and we are, more importantly, above the 200-day moving average. And so how and the whys and all that we can put aside, and now the focus, I think, should be on holding that 200-day moving average, give or take.
I don't think this is a conversation about semantics at all. This is a conversation about fundamentals. Fundamentals last week were deemed to be deteriorating at a reasonably quick pace. I mean, I know the jobs report was better than expected, but you had recession expectations everywhere, seemingly ratcheted way up.
Data.
You had, this tremendous dense fog that was over corporate America, muddying the situation up for what, was going to lie ahead. Now I feel like you have a wholly different environment. We still have tariffs, obviously, on China, but I don't know. I feel like the whole narrative of the market's changed.
So I would push back on the characterization, as you put it last week, that things were deteriorating. What you had was sentiment deteriorating and expectations deteriorating.
Okay, that's fair. That's fair. And you're right to point that out. But one could easily bleed into the other, right? If bad sentiment.
Yeah, no, that's fair.
And sentiment in the market was pretty terrible.
Yeah, people were really worried. And the point I kept making coming on, and I know Stephanie Link was doing much of the same, was, hey, it's not just the jobs data, it's the earnings report, it's the commentary. I always talk about Visa and MasterCard and Capital One. This morning, Bread Financial, a much smaller issuer, gave an April update, and it was pretty strong. Costco put out sales. It was fine. In terms of how companies are doing in the world right now, they're still doing really well. And I get it that what we're talking about and what we're worried about is, again, 30, 60, 90 days in the future. But at least right now, again, things look pretty darn good.